The big question right now seems to be about whether or not Bitcoin is achieving the store of value proposition. I gotta say, Ari, it's looking pretty rough right now. What do you think?
Well, Oliver, first, a pleasure to be back and chatting with you again. I've never thought Bitcoin was a store of value currently in the sense of maintaining purchasing power. The store of value today for Bitcoin means seizure resistance. So if you own Bitcoin, you're not worried about a bank just refusing to give you your money or a bureaucrat confiscating it. So it's a store of value in that sense, not in a price stability sense. It's still very early days. Many Bitcoin proponents and hodlers believe it will eventually lose its volatility over long periods of time.
So this is interesting, Ari, because when we had the big run up last year, there was a run up that happened with bonds and gold. It was a run up that happened with the stock market too. So with correlations around the board basically high, it was kind of hard to tell. But maybe was there something going on there about the trade war that was particularly useful to Bitcoin's narrative then?
It's hard, take a slight step back. Rolling correlations still have not broken over 30%. So it's funny, on a day with a big equity move, yes, Bitcoin moves with it. If you tell me equities are down 10%, Bitcoin's almost certainly down too. But even in this period, even correlations over the last 90 days are actually pretty darn low. Bitcoin still looks relatively uncorrelated to equities, gold, treasuries. I think it's almost like a pattern recognition thing. It looks more correlated than it is because we look at how it did in a 3-hour window when equities opened down big, right? Or when gold makes a really sharp, sudden move and Bitcoin rallies, we think it's correlated with gold. But if you actually run the numbers, just basic correlation, it's not that correlated. And evidence of that, for example, is that year to date, equities are down, I don't know, as of today, 13%, with Bitcoin up 10%.
Now,
it's hard to think of that as super correlated.
Yeah. Over the last year, obviously, Bitcoin's had big moves still that we can't discount. Ari, if we look at the last 30 days, though, I'm just looking at a basic 30-day price correlation, and it looks much stronger with stocks. I think it's like 0.85 right now, whereas it dropped off pretty sharply with gold. And I like your point here about kind of defining what store of value it would be. But if many in the space don't see it as specifically as you do, what does that mean then? I had Mike Novogratz on the show, and he basically said the best bull case for Bitcoin a month ago was the Fed doing emergency cuts. They did emergency cuts.
Sure. Well, my mental model is a little bit like gold in the last financial crisis, where gold was in this kind of secular bull trend heading into 2008. But then from around, August to November, gold lost 30%. And a lot of people at the time were saying exactly the same thing. They said, wait, we thought gold was supposed to do well, and we're about to have all this quantitative easing. And QE was a little ways away still, but a lot of stimulus, a lot of easing. And gold did terribly during the crash and then resumed its very strong bull market immediately after. So my guess, and it's a guess, it's an educated guess, that Bitcoin's going to act very similarly, which is when equities are collapsing, Bitcoin's a risk asset. So Bitcoin sells off with equities. But I totally agree with Novogratz that the strongest bull case for Bitcoin is what we're seeing right now, which is the entire U.S. Treasury curve below 1%. People are actually starting to talk about that we may see negative yields on the U.S. Treasury curve. Absolutely. I think very similar to gold, Bitcoin benefits from negative real interest rates. If there's nothing else you can productively do with your money, if real interest rates are negative, that's historically been very bullish for gold, and I think for Bitcoin too. And then just money printing. So we're having announcements of fiscal stimulus from most of the countries around the world, aggressive Fed rate cuts, and just a zero interest rate world. Absolutely. I think that's very bullish for Bitcoin, but I think like with gold last crisis, there's going to be a delay.
This is tough, Ari, because we've had two instances now over the last 12 months that seem admittedly great for Bitcoin if Bitcoin is indeed going to succeed in a world where central banks have become frivolous with their cuts and governments are devaluing. In the trade war, it looked like we were on the precipice of a currency war, and Bitcoin got to about 14,000. Now this year, we're in the middle of a huge turnaround by the Fed that looks pretty darn alarming. But if both these events, Ari, are bringing us to lower price points than 2017's big speculative bubble, what does it say? Does it mean that the narrative for Bitcoin was still too bubbly? Is it doomed by that event that happened in 2017? Why isn't price higher right now when the fundamental case is so much better?
Well, I totally agree with you on the fundamentals. The nature of markets, I would have to say it's good that things don't happen exactly when they air quote should, because otherwise there wouldn't be the opportunity. It's like poker versus chess. If everything was priced in instantly, right, traders and investors wouldn't have much to do. Poker, you've got the volatility, which creates markets and opportunity. Yeah, I mean, I agree with you. The fundamentals are stronger than ever, but you do have a really powerful wealth effect, portfolio rebalancing effect, whatever you want to call it. People own, it's why in 2008 did everything go down together, even things that weren't directly impacted. Because people own a basket of assets. They own some equities, they own a little Bitcoin, they own gold, and generally everything goes down together when everything's hit hard enough. Right? When you look and see your entire portfolio is marked down 30%, you look for cash wherever you can find it. You look for liquidity wherever you can find it. So I think that's why gold sold off. Everything sold off in 2008, right? During that crisis period, and then the stronger assets kind of caught a bid, start of first quarter of 2009. So I think it's the same thing here. Yeah, Bitcoin is a risk asset. It is speculative. What I've seen anecdotally in the industry is a lot of people who said, we're very confident that Bitcoin's going to be higher by the end of the year. Those people were, however long they were comfortable, 100% long, 150% long, 50, whatever their comfort level was. Now they realize it's a riskier world. There's more uncertainty. A little bit like risk parity, right? Traditional investors, when vol is higher, own less stock. Not because they're less confident in the 10-year prospects, but because it's a riskier asset to hold short term, it makes sense to own a little bit less. So you get that same effect in Bitcoin.
Now, Ari, there's a kind of like a philosophical trend question though here, isn't there? Because if you're a price guy, the momentum guys, the price is king people who watch technicals will say the lower highs in Bitcoin with the increasing fundamental story suggests that the story and the narrative is not latching on. And for crypto and Bitcoin, a new asset, doesn't it need to have that belief that more people are coming around to it? Because if it doesn't, then there's still a risk that this thing just doesn't get accepted, that it just keeps slipping to who knows where, what level. At what point do we set up the timeline and say, you know what, people didn't believe the story?
Yeah, I mean, it's tough to answer. Similar to our conversation a while ago, my mindset is just so different that it's such a young asset, right? We're 11 years into the life cycle of this thing. And my answers have been the same basically for 5 years on this. People were saying the same thing about Bitcoin 6 years ago. Hey, no one's using it for anything. It's like, hey guys, it's 5 years in. We have way more adoption than email did at that point, more than the internet. So I think most of the crypto industry, obviously there's hot money, there's retail speculators who want an instant payday, but most of us, this is long term. This is like being at Amazon in the mid 90s. This is, or like betting on tech in general in the 90s. It's going to catch on because of the fundamental value proposition. We see evidence of that every day. We see evidence of adoption, distribution. I mean, one way to frame this very lengthy period we've had since the highs in 2017 is we had a massive bubble, and now we're having a very long distribution phase where the weekend retail speculators are gradually being liquidated, and it's going into stronger hands. So every day there's money flowing into institutional vehicles, things like GBTC, like backed futures, CME, all of that volume continues to grow. We see traditional financial institutions getting in every month. So we have this long distribution phase where Bitcoin is being redistributed from a very small number of hands, people who owned it and mined it, 6 years ago, to a broad base. And that's very healthy. And it is slow, and it can be painfully slow. As someone who has a lot of exposure to Bitcoin, sure, I kind of wish the world would just recognize it faster. But no, I don't think there's a ticking clock scenario here. The basic value proposition, which is seizure resistance, censorship resistance, is at play every day. And is working today.
Ari, about 30 seconds, if you will, for me. Everybody's still talking about this halvening event. How can this possibly be price positive when everybody knows about it, Ari?
This is hotly debated, and frankly, I think the debates are not that much more sophisticated than, or even less sophisticated than efficient market debates on any Wall Street desk. Are markets efficient? What does that even mean? The halvening is interesting for its second order effects. So for example, if the Bitcoin price is here when the halvening happens, a lot of miners will be underwater and insolvent. It's maybe not that different from what's being discussed in the crude oil industry today. That can produce some minor second order problems and some liquidation from that. There's also some bullish effects that come from the halvening. Frankly, I'm maybe an outlier, but I've never thought of the halvening as that significant. It's very psychologically important. It's how we get to zero terminal inflation. It's part of the Bitcoin value proposition. But I agree with you. I don't really view it as an event.